Today is October 29th. It's actually my 50th birthday, and I want to thank each and every one of you for making this year and several previous years amazing for me. I feel like it's my birthday every day because I get to do exactly what I want and I get to help my favorite people. So thank you for making my birthday and every day here at Wealth Press an amazing day. And now, let's get into it right now. European shares were higher Thursday after Asia shares logged down moderate losses. Sell off on Wall Street. Shares gained though in Paris, London, and Shanghai, but fell in Tokyo, Hong Kong, Sydney on Thursday. Oil prices are not doing well. They're extending their losses. We just have too much supply. We've got oil inventories coming out. Petroleum status report. I'm going to tell you, I'm going to make a prediction. There's way too much oil in the world, and there's not enough demand for it. And yes, I'm going to say it again. 56% of America is using non-traditional energy, and the rate is going. And it has nothing to do with Democrats or Republicans. It has to do with what we call technology advancement and going further into the future, just like we have electric cars and so forth and so forth. Japan's central bank kept its ultra-loose monetary policy unchanged while downgrading its outlook due to COVID-19. It looks like we're going to have March, April, and May all over again. The rebound in Europe followed steep losses the day before after French president announced tough measures to slow the virus's spread. And German officials agreed to impose a 4-week partial lockdown. That's bad, because typically that's telling us what we got going on here in America about a few weeks in advance. That's what happened last season. The alarm spread to Wall Street, where the S&P slid 3.5%. Biggest drop since June, and in June we had the biggest drop since February. So this is not pretty. In Asia, some places like Thailand and Taiwan appear to be keeping the pandemic in check, while caseloads surge in others. India surpassed 8 million confirmed COVID-19 cases, second only to the US Thursday, with almost 9 million cases. Indonesia, Philippines are struggling. This is not good. It sounds like Groundhog Day from last February. If you look at my report now and you go back to one of my videos from February or March, you're going to see the same thing. Now, retail sales in Japan, world's third largest economy, fell almost 9% from a year earlier in September. Not good at all. It looks like Japan needs aid, monetary aid, or aid from central banks just as badly as U.S. does. In U.S., cases are increasing just about every state, and the number of deaths and hospitalizations due to COVID-19 are rising. Uncertainty over the election is not helping either. And crude oil, folks, $37 a barrel. Again, that's less than U.S. frackers pay to start working with it. So there's a bleed right now. There's just way too much oil. Way too much oil. And it may take 6 to 8 months for the inventory to begin clearing up. Investors hope that Congress and White House could soon offer more big support for the economy as it struggles through its pandemics. But those hopes have largely faded. I'm still not giving up. We still have several days before the election, and I still believe that's going to be Trump's wild card. Hey, I'm entitled to believe what I want, but what do I know? Speaker Pelosi, I wish I didn't have to read her name this early in the morning. She really does need to retire, in my opinion. And Treasury Secretary Mnuchin have continued their talks, but investors see little chance of a deal happening. And that's really too bad. It really is. I think that would do quite a bit to stimulate the economy, give Trump a boost that he needs. I think it would be really good all around. Now, as far as data, I'm a little surprised the market sold off so much yesterday because we've got GDP tomorrow. And GDP is a huge report, but I understand the market sold off in light of the COVID-19. But again, GDP is really important, and I would assume, I'm going to make an assumption, but again, this turn down in prices is being caused by global markets. So I don't think the GDP will have as much of an impact. But we're opening up a little higher right now overall. But keep in mind, with the GDP, you really don't know what's going to happen. And we've got jobless claims. Pending home sales, I'm going to make a educated guess, are going to be really strong. But jobless claims and GDP, watch out. Watch out. So I wouldn't make too many bets right now. I would be very I would only have about 15% exposure. And if you're going to have more exposure, make sure you have shorts as well as longs. Now, I'm going to talk about something that I've been talking about for months, and I'm going to say, I told you so. Folks, how long have I been telling you the market's overbought and it's going to cool off? Let's look at the S&P first of all. We broke a symmetrical triangle, and right now we're down 0.56, so we're already lower. I thought we were high. Actually, we were higher about 20 minutes ago. Now we're lower. And if you look at the QQQ, let's take a look at all of them. It's actually still a little positive, but if you look at the Russell, it was negative. Let me just show you this. Look at that. So the S&P and Russell are already going lower. That's not a positive sign. That's a negative sign. And especially in light of what I'm going to show you right now. Yeah, look at that Russell. This is a little earlier. It's already breaking the low by quite a bit. It's already down 52. Now, this is actually not so bad for President Trump because the Russell is pricing in Biden. And right now, let's look at the SPY versus Biden. SPY versus Russell. The SPY is only down 0.19. So the market is starting to favor Trump a little bit. Hey, I'm trying to do everything I can to be positive because I really do want Trump to win again. Again, the market's down a little bit better. Let's look at BABA. That's a Biden stock. Let's see how it's holding up. Yeah, it's holding up. Let's look at NEE. Yeah, Biden stocks are still holding up. Yeah, Biden stocks are holding up really well, actually. Let's look at a Trump stock. No, that's not holding up so well. And I like this stock, too. I like Caterpillar quite a bit. It took out the high of September 2nd. I'm only looking to go long on stocks that took out the high of September 2nd. Why? Let me show you again. Because that was the high. And now we're breaking down. And this symmetrical triangle, as it was winding, I told you guys there may be a good chance we're going to go down. And let me show you why. This is the NASDAQ. This is the S&P 500 number of stocks trading above the 200-day moving average. This allows us to look at the market, giving each company equal market capitalization. If you look here, we peaked out around the 70th per 72 percentile, and we were heading lower. But this is a 200-day, so this is conservative. If you look at the short term, the highs have been going lower, and it looks. And every time we come up here, we tend to usually come off pretty well to the 10th percentile. We're at the 27th percentile. I think we're going to go minimum 20th percentile and possibly 10th percentile. So I don't believe this sell-off is over, and I think we're going to have more selling pressure. Now, looking at the NASDAQ looks like it just begun. Look at this. This is the 5-year. This is the highest level we've achieved in 5 years. And let me go a little longer. Every time we go to these levels, we tend to cool off. Now, we're there right now on the way down, and we have a long ways to go. Now, if you look at the number of stocks in the NASDAQ trading, let me go to the previous chart. The 50-day line, we look like that's the S&P. Sorry, I wanted to go to the NASDAQ. Sorry about that. Let me do this one here. Got all these buttons I'm pressing. Hopefully I'll get the right one. So if you look at the NASDAQ, if you look at the short term, looks like we're again at about 27th percentile. I think we're going to go to 20th or even 10th. Why? Well, take a look at this. This is eye-opening. This is 20 years of data. Every time we go into the zone or go above this zone, what happens? Boom, 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 boom. Highest level. Look at this. In the last 20 years, we've never had so many stocks above the 50-day moving average. We had 99 stocks. That's high momentum levels. We're cooling off. We're at 26th percentile. And I think we're going to go down to at least 20th or 10th on the stocks trading above the 50-day line, and on the S&P. We're also 27. I think we're going to go to 20, 10, or possibly lower. Either way you look at it, if you look at the long term, if you look at the long term, we're just turning south on the S&P. If you look at the short term on the S&P, we've got more to go. If you look at the long term on the NASDAQ, it looks like we just begun. Look at this. Look at this. Again, I'm going 20 years here. Let me go max. I mean, look, we just begun. And if you look at the 50 on the NASDAQ, even though it looks like it's headed down, it looks like it can go lower, especially in light of us hitting such high. Look, we've never been up this high. And now there's probably a good likelihood that we're going to go to at least 20 to 10. Then we'll bottom out, but not quite yet. So you got to take a look at your S&P with the momentum levels. Don't just look at the S&P charts. Look at it with momentum levels like I'm doing right now. Very, very important. So I believe the market is not done selling off. I don't think it's going to be a bloodbath. I think we're almost done. I think the short term is telling us that we're going to bounce soon. I mean, we're already at 27%. We're going to go down here. But again, already we only have 27% of stocks trading above the 50-day moving average. All right. 63% are below. And I think the number is going to go all the way down here. So keep your eye on momentum levels, on the NASDAQ momentum levels and the S&P momentum levels, the 50-day, and the 200-day. Those are the biggest ones, the 50 and the 200-day. And they're going to give you really good tips. Now, let me give you a little bonus for today. Let me go to my filters. Love giving you bonuses. It's my birthday. Got to give you some bonuses. Let's look at the best sector. Consumer discretionary still leading. Energy still selling. Let me give you a few stocks to sell. Let's go to the weakest list. FANG. Energy stocks, folks. Energy stocks. Don't try to pick the bottom. Intel, Citrix, Boston Properties, Vertex, EOG, PSG, Phillips 66, which I've been talking about shorting every time we do this list, I think. FANG, Holly, VLO, again, VLO, HFC, FANG, PSX, EOG, VRTX, BXP, CTXC, INTC, and Exxon. I mean, look at some of these stocks. Ouch. Don't try to bottom pick, folks. There's a good chance they're going to go back down here. Look where they're at right now. Look where Exxon is right now. This is the lowest low of 2002. Folks, this is not a time to be a hero. Now, I've got something important for you. Not many people know this, but you can make thousands of dollars a month in the stock market without buying stocks, bonds, or options. That's right. It's possible. Yes, there's a lot of ways to skin this cat. In fact, Wall Street elites like Warren Buffett have quietly used this technique to line their pockets for decades. That's right. Warren Buffett, one of the richest men in the world, has been using this quietly behind the scenes. But their secret, it's finally come to light. In this exclusive presentation, market veteran Tom Busby, he's not just a market veteran. This guy's a market wizard. He's right 4 out of 5 trades. He reveals one little known stock market transaction that'll level Wall Street's playing field. Folks, you don't want to miss this. He'll show you how you can make over $10,000 of extra income on the spot like this that you can actually keep like in a week or two. This is really good stuff. You don't want to miss this. This is an exclusive presentation. Tom Busby is amazing. This guy is the real deal. Make thousands of dollars a month without owning stocks, bonds, or options. You don't have to buy stocks, bonds, or options, and you still make a killing. You don't want to miss out. Tom is the key. He's your ticket out of this mess that the market's in right now. All right? Follow the link below. Learn all about it now. Don't delay. And thanks for